Your state pension is almost certainly wrong. Not might be wrong, is wrong. The Department for Work and Pensions confirmed in February 2025 that an estimated 1.6 million pensioners, predominantly women born before 1966, have been systematically underpaid due to decades of administrative errors in home responsibilities protection credits. The average underpayment sits at £5,300 per person. Some cases exceed £40,000. Margaret Ellison, 74, from Stockport, discovered last September that the DWP owed her £11,200 in backdated state pension. Money she'd been missing from her weekly payment for 9 years without a single letter, a single flag, a single notification from the department responsible for paying her correctly. The DWP has allocated £1.5 billion for corrections. They've set no deadline for you to check. But here's what they haven't told anyone clearly. The review process is not automatic for everyone. And if your national insurance record contains specific gaps between 1978 and 2010, you could be owed thousands right now that will never reach your bank account unless you take one specific action before your case falls outside the active review window. I'll tell you exactly what that action is in the next 90 seconds. But first, you need to understand how this happened, because the error isn't random. It follows a precise pattern, and if that pattern matches your working life, you're almost certainly affected. Between 1978 and 2010, the UK operated a system called Home Responsibilities Protection, HRP. This wasn't a credit you applied for. It was supposed to be applied automatically when you claimed child benefit for a child under 16. The idea was simple. If you stayed home to raise children, your national insurance record shouldn't be penalized. HRP was meant to reduce the number of qualifying years you needed for a full state pension. On paper, elegant. In practice, catastrophic. The DWP's own internal audit, published in January 2023 under reference PSP/IA/2023-01, found that HRP credits were never properly transferred when the system switched from the old state pension rules to the new state pension on April 6, 2016. Millions of records were migrated. Hundreds of thousands were migrated incorrectly. And because the old HRP system was paper-based before 2000, entire years of credited contributions simply vanished during digitization. Let me make this specific. If you are a woman born before April 6, 1966, and you claimed child benefit at any point between 1978 and 2000, and you currently receive less than the full new state pension of £221.20 per week, your record needs checking, not eventually, now. Consider Dorothy Ashworth, 72, from Leeds. Dorothy raised 3 children between 1981 and 1999. She claimed child benefit for all 3. When she reached state pension age in 2018, she received £164.30 per week. She assumed that was correct. Why wouldn't she? The DWP calculated it. She trusted them. It wasn't until her daughter read an article in late 2024 that Dorothy requested her full national insurance statement online through the government gateway. What she found was staggering. 8 years of HRP credits, completely absent from her record. 8 years that should have counted toward her qualifying years had simply disappeared. After a 7-month dispute process, Dorothy's pension was corrected to £198.45 per week, and she received a backdated lump sum of £8,940. Dorothy's case is not unusual. According to figures released under a Freedom of Information request by former Pensions Minister Sir Steve Webb's consultancy team, the DWP identified approximately 210,000 cases in the first phase of their review alone, and they estimate between 500,000 and 1.6 million total cases remain unresolved. Now here's what makes this particularly insidious. The DWP has stated publicly that they are conducting a proactive review and will contact affected pensioners directly. That sounds reassuring. It is not. The review is being conducted in phases, prioritized by the pensioner's current age, oldest first. If you're between 68 and 74, you might not be contacted for another 2 to 3 years. Some pension campaigners argue the full review won't complete until 2028 or even 2030. Every week you wait is a week of underpayment you might not recover. I want to be precise about who qualifies for this correction, because not every pensioner is affected. The pattern is specific. You are likely affected if all three of the following apply to you. 1. You are a woman who reached state pension age on or after April 6, 2016, meaning you're on the new state pension. 2. You claimed child benefit for a child under 16 at any point between 1978 and 2010. 3. Your current state pension payment is below £221.20 per week. If all three apply, your next step is not to wait. Your next step is to request your national insurance record. You can do this 2 ways. Online, through your personal tax account on the HMRC Government Gateway, or by phone, calling the Future Pension Centre on 08007 310175. When you call, ask specifically for your full national insurance contribution record showing all credited years, including HRP. Use those exact words. The standard record they send often omits HRP detail unless you specifically request it. I'd be genuinely curious. If you've already checked your record or made a claim, tell me what happened in the comments. Because from what I've seen in previous videos on this topic, the experiences vary enormously depending on which DWP office handles your case. Here's where this gets worse. The DWP's correction process has a limitation that almost nobody discusses publicly. Backdated payments are currently being calculated from the date the DWP identifies the error, not from the date the error began. There's considerable legal debate about whether this is lawful. Some pension solicitors believe that under Section 27 of the Social Security Act 1998, the DWP is obligated to correct from the point of original error. Others argue the DWP's interpretation, which limits backdating in certain circumstances, has not yet been successfully challenged at upper tribunal level. What this means for you is straightforward. If the DWP finds your error in 2027 instead of 2025, you could lose 2 additional years of backdated payments. At an average underpayment of £38 per week, that's approximately £3,950 in lost recovery, simply because you waited for them to come to you instead of going to them first. Gerald Thornton, 69, from Nottingham, learned this the hard way. His late wife, Patricia, was underpaid by £42 per week for 6 years before her death in 2023. Gerald applied for the backdated amount as her estate representative. The DWP initially offered only 14 months of back payment, citing their internal correction date. It took Gerald 11 months of correspondence and a formal complaint to the independent case examiner, reference ICE-2024-08172, before the DWP agreed to a full correction totaling £13,100. 11 months of letters, phone calls, and escalations for money that was rightfully Patricia's from the beginning. If any of what I've described matches your situation, or the situation of someone you care about, and this information has given you something you didn't have 10 minutes ago, I'd appreciate you pressing the like button below this video. It takes 2 seconds, costs nothing, and it directly helps this reach other pensioners who are owed money they don't know about. That genuinely matters. Now let me address something that confuses a lot of people about this issue. HRP and national insurance credits are not the same thing. After 2010, HRP was replaced by national insurance credits for caring responsibilities. If you claimed child benefit after April 6, 2010, you should have received Class 3 national insurance credits automatically. The system change in 2010 is not where the errors are concentrated. The errors are concentrated in the 1978-2010 HRP period, particularly in cases where a woman's child benefit was paid to her husband's national insurance number rather than her own, a practice that was standard before 2000 and affected millions of married women. This is the hidden tripwire. If child benefit was registered under your husband's national insurance number, which was the default arrangement in most cases before $2,000, the HRP credit may never have been linked to your record at all. You could have raised 4 children over 20 years and have 0 HRP credits showing on your national insurance statement. The DWP knows this. Their own guidance note, DMG Memo 04/23, acknowledges the issue explicitly. Yet the burden of identification still falls largely on the pensioner. Let me give you another example that illustrates a different variant of this error. Susan Brennan, 70, from Bristol, never married. She raised 2 children as a single mother between 1984 and 2002. She claimed child benefit in her own name for the entire period. Her national insurance record should be clean. It wasn't. When Susan checked her government gateway account in March 2025, she found that her HRP credits for 1984 to 1988 had been recorded as unverified, a status that means they weren't counted toward her qualifying years. The DWP couldn't explain why. Susan's pension was £17.60 per week, lower than it should have been. Over the 6 years since she'd started claiming, that amounted to £5,490 in underpayment. After submitting a BR-19 form and supporting documentation, her original child benefit award letter, which she'd kept in a filing cabinet for 4 decades, the correction took 9 weeks. Susan kept her paperwork. Most people don't. And that raises the critical question. What happens if you no longer have documentary proof of your child benefit claim from the 1980s or 1990s? The answer is more hopeful than you might expect. HMRC maintains child benefit records going back to 1977. If you call the Child Benefit Helpline on 03-002-003-100 and request confirmation of your historical child benefit claim periods, they can provide written confirmation that the DWP will accept as evidence for HRP correction. You don't need your original letters. You don't need old bank statements. HMRC has the data, but you have to ask for it. They will not volunteer it. Here's the sequence. Step 1. Check your national insurance record online or by calling 08-007-31-0175. Step 2. If HRP years are missing, call HMRC, Child Benefit on 03-002-003-100 and request written confirmation of your claim dates. Step 3. Submit a formal correction request to the DWP Pension Service. You can do this by writing to the Pension Service 9, Mail Handling Site A, Wolverhampton, WV9 81LU, or by calling the State Pension Claim Line and asking to raise a pension correction case. When you call, reference HRP conversion error. Those 3 words get your case flagged into the correct review stream. If you've watched this far into the video, you're clearly someone who doesn't leave their finances to chance. Subscribing to this channel means you'll see the follow-up video I'm releasing next week on the married woman's reduced rate election, the second major source of state pension underpayments, and how it connects directly to the HRP issue we've covered today. That video contains information that affects an additional 300,000 women who paid the small stamp and were never told their rights changed in 2008. Now, let me connect something that almost nobody, including most financial advisors, connects properly. The HRP underpayment is not just about your weekly state pension amount. It cascades. If your state pension is lower than it should be, and you've been assessed for pension credit, housing benefit, or council tax reduction, those assessments used your incorrect pension figure as the baseline. A £38 per week underpayment in state pension could mean you've been receiving less pension credit top-up than you were entitled to. In some cases, correcting your state pension actually reduces your pension credit, but the net gain is still positive because the state pension increase exceeds the pension credit reduction. However, and this is crucial, if you're currently receiving full pension credit guarantee credit and your state pension increases after correction, your pension credit will decrease by the same amount. In that specific scenario, the backdated lump sum still belongs to you, but your ongoing weekly income may not change. This is why some pension advisors suggest that if you're on full guarantee credit, you should still pursue the correction for the lump sum back payment while understanding that your weekly figure may stay the same going forward. Tax implications also matter. State pension arrears paid as a lump sum are taxed in the year you receive them. If the £11,000 back payment pushes you over the personal allowance of £12,570, you could face an unexpected tax bill. Some pensioners have reported HMRC sending tax demands of £1,500 to £2,200 after receiving their correction payment. There are ways to manage this. Requesting that the DWP split the back payment across tax years is technically possible under ESA Regulation 13(2), though success varies by case handler. Another option, if the arrears relate to years where your total income was below the personal allowance, you can request that HMRC apply the tax to those original years instead. HMRC's guidance on this is found in their PAYE manual at PAYE 73015. Barbara Kendrick, 73, from Wolverhampton, received a correction of £14,600 in October 2024. In January 2025, she received a simple assessment tax demand for £2,890. Her daughter helped her write to HMRC requesting reallocation of the income to the original tax years in which Barbara's total income was below the threshold. HMRC agreed. The tax bill was cancelled entirely. Barbara kept every penny, but she had to ask. HMRC did not offer this option in their initial demand letter. The DWP's own estimate, published in their annual report and accounts 2024 to 25 down, suggests the total value of state pension underpayments related to HRP, married women's pensions, and inherited pension errors exceeds £3 billion. They've corrected approximately £900 million so far. That leaves over £2 billion still sitting in the system, owed to pensioners who either don't know they're affected or are waiting in a queue that stretches years into the future. Your action plan this week is specific. Monday, log into your government gateway account or call 08 007 310175 and request your full national insurance contribution record. Tuesday, compare your credited years against the years you claimed child benefit. If years are missing, note them. Wednesday, call HMRC child benefit on 03002 003100 and request written confirmation of your claim periods. Thursday, if gaps are confirmed, write to the Pension Service 9 at the Wolverhampton address, referencing HRP conversion error, and include your national insurance number, the specific missing years, and the HMRC confirmation once you receive it. Don't wait for the DWP to find you. Their timeline stretches to 2028 at the earliest. Every week of delay is approximately £38 you won't recover. Margaret Ellison, the woman from Stockport I mentioned at the start, received her £11,200 back payment in December 2024, 14 months after her daughter first checked her record on a Sunday afternoon. Margaret told a journalist from the Manchester Evening News that she'd assumed her pension was correct for 9 years. "I trusted them to get it right," she said. "That was my mistake. Your state pension is a legal entitlement calculated from decades of contributions and credits you earned. If the department responsible for paying it made an error, and the evidence suggests they made hundreds of thousands of errors, the correction doesn't happen through trust. It happens through action, yours." In the next video, I'm covering the married woman's reduced rate election, also called the small stamp, and why women who paid it between 1977 and 2008 are owed a pension recalculation that most have never been offered. If you thought today's HRP errors were hidden, the small stamp issue is buried even deeper. That video drops within the next 7 days. The DWP doesn't owe you an apology. They owe you a correct pension. One of those things you'll never get. The other you can collect, but only if you check.